Nobody seems to be noticing what is currently happening to natural gas, and so you can actually profit from that. In today's video, we discuss the most important technicals, fundamentals, and also macroeconomics of this commodity. We have seen that long stretching upwards trend here at natural gas since 2023, and we are currently hitting this $3 support level at the low band of this blue upwards channel. If you have a look at the hourly chart, you can beautifully see that we've recently actually broke out of this falling wedge here. And so whether or not we're about to see a upwards trend continuation here, that is a question that we can only answer by taking a look at the macroeconomics and fundamentals, because those are obviously the main drivers of this commodity. And so whether we're about to hit those resistances here next is exactly what we are discuss by taking a look first at the dollar. You know, the dollar is probably one of the most important drivers of every asset class because every asset is measured in dollars. And so, obviously, whether you do see the dollar rise or fall, it always influences the actual underlying asset price. And so, what you can beautifully see at this chart is, first of all, that you tend to see the dollar also move in cycles. You tend to see periods where the dollar is strengthening, and you tend to see the periods where the dollar is weakening. And obviously, you have to understand that those are also cycles. And if you combine those patterns here and have a look at where we are currently heading here at natural gas, you tend to see that history is actually about to repeat itself. We are currently having this high here in 2022 after the Corona crash hit, and we've seen that massive QE, and the asset prices have been going up higher and higher. But recently, we've seen that massive weakening here at the dollar. We've seen a massive sell-off at the dollar. And as you may have already seen, we do have this kind of pattern forming out. And so if you have a look at the last few times we've seen those dollar crashes, that obviously actually led to a certain behavior at natural gas. For example, if you have a look at natural gas here in 2001, you've seen the dot-com bubble, you've seen a crash happening to natural gas, obviously also to the S&P and other asset classes. But you've obviously seen that the dollar has been weakening, and so obviously we've seen that long stretching upwards trend here at natural gas. Not because everybody bought natural gas, but just because the measurement of which you measure natural gas in has actually declined in value. And so that has happened here in 2001. If you have a look at those other periods, you can have a look, for example, at other assets like the equities market. And you tend to see crashes, obviously, but as the dollar is weakening heavily, you tend to see that, obviously, because of the fact that the S&P is also measured in dollars, the companies that are making up the S&P are measured in dollars, and as the dollar is weakening, you see that this crash is less severe. You do see that a reversal is following in a blink of an eye. And so to summarize the current state of the US economy, we have to understand the following things. We have seen that we have less GDP than in Q3. We've seen that Q3 GDP has actually been at around 4.4%. The expectations for Q4 GDP have been at 3%, so already lower than 4.4%, but they actually have been at 1.4% now, as they've been released. And so obviously that is showing you that GDP has already been dropping significantly. But why has the stock market not crashed already? Well, because of the inflation that we are seeing. We have seen that inflation has been going higher from 2.9% to 2.8%. And so obviously what you're seeing is massive similarities currently occurring to, for example, the 1970s, where you've seen that massive debasement trade at the dollar, and when Paul Volcker obviously hit those 20% interest rates as a result of that massive dollar devaluation. And so it seems like the dollar is trapped, that the US is currently trapped, because obviously you do have two kind of policy possibilities. You could cut the rates, which obviously would lead to higher inflation, which we're already seeing. You can obviously hold rates, which obviously would lead to the economy, which is already decreasing in GDP statistics, obviously that would lead to the economy also keeping break down. And so you do have this dilemma at this point that cutting rates or holding rates would actually lead to bad things happening, to a crash happening. But we at Chronos believe the likelier scenario is always the inflationary scenario, because you have to keep in mind that the USA is currently running massive overspending programs. We are seeing debt problems, and the only way you can actually decrease the debt is by inflating it away. And also concerning the geopolitical risks that we're currently seeing here with the Strait of Hormuz, the only way you can monetize all of those expenditures with for example, those naval assets that are moved from one point to another, and also the risk of war. Obviously, those are all factors that are speaking for a inflationary development here in the US in the next few weeks and months. Now, let's have a look at the past few years at natural gas, because obviously history is also repeating in that time frame. And you tend to see massive natural gas crashes occur when you've seen that the dollar dropped and actually started to go up, right? When the dollar is starting to go up, when the measurement in which you are measuring the natural gas prices is going up, obviously natural gas prices are dropping, and also that most of the time just coincided to liquidity actually decreasing. You've seen those deflationary developments. That happened several times. We can beautifully see that happening several times. And in the last few videos, we talked about that actually happening again. We've seen that the dollar now actually has been going down to levels that we've previously reversed from at this blue trend line here. And that obviously would lead to a scenario where we do see the dollar rise again, and where we do see a deflationary crash happening. Let's have a look at the copper to gold ratio. You tend to see concerning this correlation with natural gas and this ratio, that before those crashes happened, for example here in 27 and 28, you previously have seen a divergence between this ratio, where this ratio has actually been dropping as natural gas prices have actually still been rising. And so that divergence actually preceded many crashes that we've seen. For example, here in 2008, for example, that sell-off here in 2011, that sell-off here in 2014, that sell-off here in 2018, several times that has actually occurred. And as we are currently seeing that divergence happening again, that would obviously also be a bearish factor. Not only a strengthening DXY could happen, but also a weakening copper to gold ratio. Coinciding to that, we are currently also seeing that the gold to S&P 500 ratio is also rising significantly. That also preceded many crashes, obviously, as people are flocking to gold. This risk of environment is actually what happens to surge in those times. In other words, you tend to see those flights to safety, those periods where gold is actually outperforming every other asset class, even though every asset is dropping because of the deflationary nature of the crashes. Now, that's exactly what we've seen happen to all of those crashes again. Now, at the same time, we've just stated, if you can remember, that we do believe that the dollar might be weakening in the long term, because obviously you have to monetize the debt. You have to make sure that the economy isn't crashing. I mean, if you have a look at the S&P 500 measured in gold, you actually see that the top was actually in here in 2021, right? And so you could actually argue we're in a bear market concerning the S&P 500 since 2021. We are just so much higher right now because of this massive devaluation of the dollar. And so it seems like we're at one of those turning points in time where we just do see this top building out that we've seen build out here, for example, in 85, in 01, and also here back in 2023. That seems to be one of those turning points which actually led to those longer-term dollar devaluations. This seems to be necessary concerning those massive expenditures that we're seeing, the fact that we're seeing that the GDP has been really weakening, the fact that we are seeing those massive debt levels. And so it seems like we might not see history repeat concerning the last few years, but actually the last few decades. That's exactly what we've seen happening here if you have a look at this chart again. And all in all, what can we learn from that? Well, the last few times we've seen those massive dollar devaluations, obviously, scarce assets like the natural gas prices have been surging higher, even though we've seen a massive crash here. For example, the dot-com crash following or happening first. Now, obviously, concerning the fact or the risk that we're seeing here with the war with Iran, that would obviously lead to the closure of the Strait of Hormuz, which obviously would lead to a massive shortage of crude oil. Now, natural gas is not directly connected to crude oil, as we've seen that massive divergence. We've seen crude oil prices actually fall off a cliff or have this long-term downward trend. And similarly, or coinciding to natural gas having this long-term upwards trend. And so this really seems to be a quite difficult situation that we have to analyze here at Chronos, because you obviously have this deflationary nature that we've seen the last few crashes with, but you're also seeing that inevitably the dollar has to weaken, exactly as we've seen it happen here in the last few decades. And so there are a bunch of scenarios that we can take a look at now. If you have a look at the technicals again, you do see we've recently broke out of this falling wedge, which obviously is quite bullish. And that would obviously suggest we might retest those resistances at around $3.60, or even this resistance at $4.4, or maybe even this upper band of this upwards channel. Those are all possible scenarios. Now, at the same time, we might see that also concerning the liquidity cycle, that we might see a massive crash happening because of the deflationary nature of those past few cycles that we've just assessed here. That would, however, mean we might have to see the dollar actually strengthening. That could happen in the short term. We might see that happening in the short term, but in the long term, that is inevitable. We might see in the long term a more deflationary nature happening. A more inflationary development happening here with the DXY, exactly as we've seen it happen here with those big cycles. We've seen deflationary crashes, for example, the dot-com crash, but ultimately we've seen that actually coincide to a massive inflationary shift, which actually led to this massive bubble forming out with the bubble forming out and finally breaking here in 28 with the great financial crisis. I hope you've now understand the current underlying factors that are in play. I hope you understand the geopolitical and macroeconomic situation that we're currently in. If you have any questions, please don't hesitate to ask them down below in the comments. I hope you enjoyed the video. If you did, please make sure to subscribe to our channel and like the videos to support us for our work here on YouTube. And also make sure to check out our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.